thanks a lot for joining us. I guess everybody expects the Bank of Canada to cut more frequently and by more in the aggregate than the U.S. Fed in 2025. What is your call on what the bank will do this year?
Currently, our call is that the bank will continue to cut interest rates in 2025, and we expect we could reach a bottom of about 2%. So we're now at 3.25, so that's another 125 basis points of cut this year.
You make the point in some recent notes that there's more uncertainty about the neutral rate, which is the rate at which the rate is judged not to be either stimulating or restraining economic growth, and therefore the terminal rate, which is the rate where the Bank of Canada will stop cutting rates. What are your thoughts on those two levels?
Yeah, well, there's a lot of uncertainty. So if we exclude, obviously, the big elephant in the room with the Trump tariffs, but if we just look at what's going on under the hood in Canada, is that we know we're going to see a sharp slowdown in population growth in Canada. And we're already seeing it. Actually, the latest population growth number, the latest quarter, saw the slowest increase quarter over quarter since pre-pandemic. So we're really already starting to see that population dynamic changing dramatically. And with that will bring potential growth much lower than what the Bank of Canada was expecting back in October. And with that, growth will be lower, and also the neutral rate would be lower. So all that is pushing that, well, the terminal rate, or where the Bank of Canada should start or will be stopping cutting rates, will be lower. That means also that with the lower neutral, the point at which the Bank of Canada is actually starting to stimulate the economy is lower than what is their estimates right now.
How important is reduced levels of immigration? The Liberal government has dialed back fairly significantly its immigration targets, and certainly Pierre Poilievre, the leader of the Conservatives, has said that if a Conservative government is elected, that government would likely further restrain immigration growth.
Yeah, well, it is important, and it's a significant impact on Canadian growth. If we just look at what the government has announced in terms of a new target, that means that population growth in Canada would be slightly negative in 2025 and 2026. That means that most of our potential growth will come from productivity gain. And if we look at the past few years, our productivity record is actually very dismal. So that means that potential growth in Canada is much likely below 1% going into 2025 and 2026. And that is what is dragging our neutral rate lower.
You referred to Donald Trump's tariff threats as the elephant in the room. Why don't we bring the elephant back into the room? What are the consequences if he follows through with 25% tariffs? You believe the Canadian economy could be pushed into a severe recession, correct?
Well, if we look at all the estimates from various sources, we could have a hit on the Canadian GDP of about 2 percentage points. Considering growth in Canada for next year is expected to be slightly above 1%, that would bring us in negative territory almost mathematically. So with that contraction, the question is, how much layoffs are we going to see in the economy? Because what has been keeping the economy afloat in Canada has been the continued strength in employment. We haven't seen any major layoff since the Bank of Canada started to increase rates in 2022. But that could change dramatically because if we start to see job layoffs, that will be a big negative income shock on households that are heavily indebted and have already some issues making the payments on those debts. So it's really that kind of negative feedback loop that could come from that will be as problematic probably as the tariffs.
The Bank of Canada has, of course, acknowledged the Trump tariff threat, but hasn't said a whole lot publicly. How do you think the bank is gaming out this possible scenario?
Yeah, well, for them, it's really estimating what will be the impact on the economy? What will be the impact on inflation? What are the optimal monetary policy response to those tariffs and to the impact on the economy? And whichever way you look at it, whether Canada decides to retaliate or not, it feels that, or the way I see it, is that the Bank of Canada should probably look through the initial impact of tariffs on inflation, because if you increase import tariffs in Canada, it's like increasing tax. It will be a temporary impact on inflation. while the tariffs and the impact of tariffs on lower export or Canadian exports will have a more lasting impact on economic growth. So it might make sense for the Bank of Canada to look through the temporary impact on inflation from tariffs, but and focus on the more damaging impact on growth.
It sounds like you believe the Canadian dollar has room to decline further against the U.S. dollar. Is that correct?
Well, considering where we are, the market is not yet expecting as many cuts as I'm expecting, so there's some room on the Canadian side to have a repricing and push the Canadian dollar slightly further to weaken further. In the U.S., the question is how strong is the U.S. economy going to continue to be, especially in the face of tariffs? Is it going to have some negative impact on growth and force the Fed to also cut that? Still a bit something to look at. But the way I look at it is there's room for the differential between the Canadian dollar and the U.S., between Canadian rates and U.S. rates to widen especially in early 2025.
Charles, thank you so much for this. As always, Charles St-Arnaud is a former economist at the Bank of Canada. He's currently chief economist at